welcome back to Keeping It Real. I'm David Grossman, speaking with Steve Kornbluth. Steve, welcome.
Thanks so much for having me.
My pleasure. Thanks for joining us. So here's a young man. I got a lot of young men here today. I call them young men. I don't know. Maybe you're the same age as me. Should I ask? That's not really appropriate. It's not really politically correct
It's
nowadays.
not, but I'm not politically correct either, so happy to tell you I'm 33.
33 years old. Okay,
Yeah.
So, and you have a young family?
I do have a young daughter, 3 years old.
3 years old?
Yeah.
Just the one now? But
and another one on the way.
Another one, yeah, because I was talking the other day, you were telling me something about that. So that's an exciting time.
It's very exciting right now.
Yeah, absolutely, absolutely. Nothing like having a young family to keep you up all night long. Right?
Absolutely.
Yeah, for sure. So how long have you been in the mortgage business?
I've been in the business about 6 or 7 years now.
Okay.
And I've been with SafeBridge for the last 3.
Okay, and what were you doing before that?
Before that, I was working in restaurants and a few bars.
Restaurants and bars?
Restaurants and bars.
Okay.
And it's interesting because at the end of the day, I find that whether you're in a restaurant or you're working in the financial services industry, it's all about people and relating to people. So
right.
I think it was an easier transition for me because I like dealing with people and talking with people.
Right. It's a service business.
Exactly.
At the end of the day.
Yeah.
And that's one of the things I noticed. Well, I noticed a couple of things. I mean, first of all, when I called you, I was referred to you because there was a deal. I didn't have this private lender, and somebody in my office told me to give you a call. So I noticed a couple of things. Well, the first one was that you were very thorough in your communications because, when you're dealing with somebody, I mean, especially, on a mortgage, I guess it's true with any product, but it's complicated. There's a lot of things, right? I mean, there's going to be an appraisal, there's going to be a lawyer, and what's the rate, there's a lot of things, and you need you want to deal with somebody who's going to tell you the whole story, right? So that was one thing. You were thorough, and you were fast, and you had the lender that I needed. And the other thing is that I have to say this, some mortgage brokers out there, like, they'll gouge you, like if it's a hard money deal, they think that gives them the right to basically charge through the nose. And you were reasonable. And that's very important if somebody's going to co-broker, especially because, there's two mortgage brokers.
Right. Yeah.
And it's not the customer's, it shouldn't really be the customer's problem that I don't have the lender. So if I can find another broker to work with and he's reasonable and I'm reasonable, then we can provide a good service. So we've actually closed some business together, which is terrific.
Yeah, and we've got to be fair to the borrower as well and, make them happy because the borrower is your client and, I want the borrower to come back to you for more business as well down the road. Right.
So you want to take good care of your borrowers. Yeah, because they'll know if there's a deal that's no good. So they expect you. It's a two-way street, right? Especially when you're in private money, you're dealing with certain clients. They want to know that you're looking after their best interest.
Right, and in certain circumstances, clients are under very stressful situations, and they're trusting you. So you got to make sure you do a great job for them because they don't really know where else to turn at this point.
Right.
So, we can't be taking advantage of people who are vulnerable in those sorts of situations.
Right, yeah, for sure. Now, SafeBridge Mortgage Solutions, or SafeBridge Financial, they have a mortgage arm, they have an insurance. You want to tell us a little bit about the company?
Yeah, SafeBridge was started probably about 7 or 8 years ago. Our principal broker is Alicios Iriottakis, and he merged it with Chris Karam. And Chris runs our insurance and investment side. And their whole philosophy around mortgages is they want to take care of their clients' financial well-being. And they've come up with a term, mortgage-centered financial planning. So they want to make sure that your mortgage, the mortgage that we get for you, encompasses your overall investment and insurance needs as well. So it's not just, here's your mortgage, see you later, hope you can figure everything else out. Right. We want to make sure that the clients are taken care of properly.
Yeah, that makes sense. Makes sense, and we're required by law to offer people insurance. So,
we're required to offer them the insurance, but we're not necessarily trained to give proper advice on that insurance. I'm not a licensed agent. I'm obligated to offer it, but I'm not trained on it. So that's why I'd much rather, refer to Chris on the insurance side, where he's been doing it a long time. He knows what he's talking about, and he can, give you the right product.
Right, who, by the way, is going to be on the show in
That's
a
right.
couple weeks. So I appreciate the introduction. That's great. Do you do any A business? And for our viewers who don't know what I mean by A business, those are the people who would qualify at a bank.
Yeah, I don't focus too much on A business anymore. If I get A business, it's mostly friends and family, so I'm not really out there marketing or pushing it too hard. Most of my business right now is referred from other mortgage brokers, and mostly it's private first or second mortgages. And for, I guess, the viewers that aren't familiar with private mortgages, it's basically a second mortgage maybe for someone who doesn't qualify at the banks. Maybe they had a credit situation or they don't show enough income and they need to get extra equity out of their property, but the bank's telling them no. But they don't want to break a first mortgage because there might be a $20,000 penalty associated with that. So we'll get them a second mortgage, get them the money they need. And typically it's through private investors, right? And these private investors are looking for better return on their money. They want something that's secure. And so they're more than happy to provide them with a mortgage on their house.
Are you focusing mainly on residential properties?
Mostly residential, yeah. We have a few smaller commercial ones that we're looking at right now, but my niche right now is residential in the GTA.
Resident. But I know I saw one of your emails recently. You closed a pretty large first mortgages over $1 million or something like that.
Yeah, we did. We do have some funds for larger mortgages. That one was around 1.3, I think.
That's nice. You get the kids a new pair of shoes. Yeah.
Yeah, that was a good deal. But everyone's different. We don't usually come across mortgages that size. So that was a rarity. Like most of my mortgages are seconds, so we don't really do too many large seconds like that. Usually second mortgages are in the $30,000 to $60,000 range. We do see some larger ones every once in a while, but that's usually the sweet spot, is the $30,000 to $60,000 range. And for investors, if people want to get into private lending, that's the best spot. That's the sweet spot that you want to be in, is in the $30,000 to $60,000 range.
You'll go up to, your lenders will go up to 85% on a GTA property?
Correct, 85%, yeah. We've had, on occasions, we've done some 90% deals as well, but those are for more really well-qualified borrowers, so we don't really want to do too many 90% deals. And one of the other reasons why I'm not really a big fan of 90% deals right now, even though I see other brokers advertising them, is there's really no exit strategy for the borrower anymore because of the recent government rule changes, where now they can only refinance to 80% of the property's value.
Right.
So if you're giving a borrower a 90% mortgage and it's going to be a high rate, probably at least 15% and higher.
Yeah.
There's really no exit strategy for them because they can't refinance next year because their property value has not increased that much in a year. And now we're sort of seeing more of a stable real estate market where everything's just going to be flatlining. I don't think there's going to be too many increases in values. So how is that borrower going to get out of that high interest rate mortgage?
Yeah, well, I mean, assuming nothing, changes in their life, I guess, if they're expecting some kind of windfall, an inheritance, or a big bonus, or maybe planning on selling the house but just need a bridge, but otherwise, yeah, you're right. Some people might be better off just selling the house rather than just digging themselves into more debt.
Yeah, and that was my advice to a borrower this morning, and we had done a mortgage for her last year, and we paid out some debts, and she brought those debts back up again, and she said she wants to sell, but she wants to buy a new house. But she really didn't improve her credit situation that much, so she'd basically putting all the money into a new property, and she wouldn't have any savings. And I said, you know what? It's better you just sell, pay off your debts, you'll have some cash on the side, rent for a year or two, we'll reestablish your credit, and then we can look at buying a house with a lower down payment at more reasonable interest rates for you down the road.
Have you ever had any experience with any of these rent-to-owns type of financing, or?
I've never done any personally. I've been marketed to from other companies. My only concern with the rent-to-owns is down the road. We don't really know how the market's going to be down the road, and if these borrowers can actually qualify or not. Because if they're saying, okay, we'll sell this house back to you, you know, for 10% higher than what we're buying it for. Well, what if there's a drop in the market? What if there's a bunch more rule changes and now they don't qualify and they're going to be walking away from this deal?
Right.
So that's sort of my concern on the rent-to-own side, is we don't know what's going to happen in the future. So you know, I can't really advise someone to get into a deal like that, because I don't know if you're going to qualify. And I only really want to put people into mortgages or, you know, a rent-to-own if I know we have a solid exit strategy.
You know, we had in here a little while ago, I don't know if you've seen his marketing, the foreclosure escape artist. I can't remember his name right now.
Yeah. Was that Darren?
Darren Plum. Yeah. Good guy. Interesting niche. You know, I guess if somebody really wants to hang on to the property and or stay in the property. But I don't know why somebody would be that attached. I mean, if you can't afford to keep your house, I suppose it doesn't hurt to look into it. But sometimes it's just time to move on. You know, cut your losses, try and get your equity out, and reestablish your credit. And you can always come back in at a later date, right?
Well, and sometimes people think their situation is just temporary and it will improve, and for a lot of people it does, and unfortunately for some people it doesn't get better, and they do need to sell. Right. And they do need a dose of reality, and I'll even put that in my disclosure forms for some people. It's like, we're giving you this mortgage as a temporary bridge, knowing your financial situation. Our recommendation is that you sell and you list this property, even though we're giving you a mortgage right now, you know, to help you out of this situation. We think it's in your best interest to sell.
Now, I've noticed in some of your emails, you sent out an email. You were talking about spin selling. And I bring this up because, you know, we have real estate agents, we have business people who are watching, and everybody's, you know, always thinking about how to sell. So I thought it was interesting that you shared that with your network. Tell us what is spin selling all about?
Well, Spin Selling is a book. The author's name escapes me. Neil Rackham, I think. But it's a whole philosophy, and SPIN is an acronym for how to sell basically to borrowers, and not borrowers, but just to anyone in general. And it's an acronym. SPIN basically stands for it's certain questions that you have to ask your clients, and you know, S is for situational questions. So basically, just getting in the mortgage business is, you know, getting their background information. What are you looking to do? How much money you have to put down? You know, basic facts.
Situation.
Yeah,
right?
Exactly. The situation.
Right.
P is for problem questions. So you have to find out what their issues are, what their situations are, what their problems are. Because if people don't know they have a problem, then it's very hard to sell to them. You know, if they can tell you, if you can find out what their problems are, it's a lot easier to sell them, because now they have some pain, right? And then I is for implication questions, and basically it's taking those problems and saying, you know, Mr. and Mrs. Borrower, you know, if we do nothing now, if we don't refinance this and, you know, pay off those $50,000 worth of credit cards, you know, what's going to happen in the future? How are you going to manage? You know, what's the implication of not doing anything right now? Right. And then the N is for, I believe it's need payoff questions.
Right.
So it's basically, you know, Mr. and Mrs. Borrower, if I can, you know, show you a way to eliminate, you know, this credit card debt and eliminate this pain and problems you've associated with it, you know, would you go with my solution, you know, present your solution? I think it's a fantastic book, and, you know, I know there's a lot of realtors watching this. Run out and get it. It's not available on Kindle. I've got a Kindle myself, and I tried finding it on Kindle, but it's not, so I got the hard copy. Yeah,
I remember about 10 years ago when I was in a sales job, and the boss told us, you know, we had to read this book. And it was funny because you and I were talking about a deal a few weeks ago on the phone, and you were asking me, you're like, well, what does the guy really need the money for, you know? And, you know, and I mean, he gave me a reason, right? But you were saying, like, I don't know, I'm not sure if I buy that, right? And, you know, so, you know, you're intuitively, you may have been right that maybe there was something else going on. I guess some people can get into trouble for all kinds of reasons, right? But it was like, you you know, I didn't want to push with this guy any further. Like I asked, you know, if the guy, I didn't think the guy was going to say, well, I have a gambling problem,
Yeah.
you know. So I you know, but then I saw your email a couple of days later talking, and I said, oh, that's why Steve was asking me, you know, about that. So so yeah, I thought that was interesting. So and you've been doing this video marketing too.
Yeah, I've been running the video campaigns now for at least a year and a half, I think. And I started off with just a direct email to a database of mortgage brokers I have, and it was just, I see so many of the same old, because we all get marketed too with lending products, and it's always like, you know, here's our guidelines and give us a call. And I'm like, well, I don't think that's enough, you know. So I started typing out stories about how I help people. And then I'm like, well, why don't I just make a video and talk so people see who I am? And that's sort of how I got into it, and I started making just little YouTube videos, you know, in my office, and I just post them online and say, okay guys, you know, here's a deal that we just did and completed. If you have anything similar, feel free to give me a call. And it just sort of snowballed, and I don't know, I probably got about, you know, 15, 20 videos up on YouTube now.
Yeah. Yeah, it's pretty powerful marketing, I think, you know, for the reasons that you mentioned. I mean, I think it's easier to talk than it is to write.
Exactly, yeah.
And, you know, if you want to buy something or talk to somebody about a problem, and you can watch them, you know, how they present themselves. Like, you can tell usually within 10 seconds of seeing a person talking, is this somebody I would want to talk to, you know?
Yeah.
So it tells so much more than just the written words. A powerful communication tool. So that's another thing we have in common, Steve. Well, Steve, thanks so much for coming on the show. I'll see you at the, hopefully you'll
Tuesday,
be at the, if your wife is okay to let you go out next. I still have to clear it with my boss lady.
Okay.
I would never say that, but somebody mentioned this. I have to check with the boss lady. But she doesn't watch the show anyhow. So anyhow, so maybe we'll see you at that event.
Yeah, I look forward to it
next week. Thanks so much for coming
you're
on the
welcome.
show. Appreciate it. That's all for this installment of Keeping It Real. Thanks so much for joining us here in the alltalktv.com network. We'll see you on Sunday. We have an exciting show for you. I don't remember exactly who's going to be on, but trust me, it's going to be a good one. We'll see you then. Thanks for watching.